The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour on this 5th day of January. My pleasure to be here and to be following up on the great host that you've had. So let's look at the Dow all-time high again at 25,164, certainly in the 25,100s. This is a period that I had been expecting. I thought there would be a deeper pullback before we got it. So I'm now anticipating that we've got to be ready within the next, just on a purely mathematical basis, the way I look at markets, left side, right side, price, time match, that we're looking at a slightly overbought situation. I suspect there will be some kind of a sudden pullback. I'm not sure what it'll be next, maybe next week. I'm not sure just when. I've got to see how we're doing in the Chapman Wave notations. But what's really interesting is that all the signs that I had been looking for, participation by the public, the market not pulling back, but having just brief periods and interludes before re-energizing to move higher, forcing the public in. And a couple of things that we're looking at here, and I'm going to go through them over the next week. I'm not going to just rush into it today because this is something that I'm formulating. I'm deriving a lot of information here, stuff that I've been talking about. Remember, I talk about this as the coda phase, that we've finished the first part of the coda phase. This is the second part of the coda phase. This could be divided into two parts as well. One part says that we're getting real close, especially the hubris of when the president considers that he is the stock market. That makes me very nervous, but it also makes me very positive because it's going to bring in the public. Now, what I meant to ask the very first day of the year when we got back on Tuesday was how many people, please email me at basilchapman@tfnn.com. Let me know, was there conversation over the New Year's break at any particular point where people discussed the stock market? Most of the people that I've spoken with sort of shake their head and say, crazy market. And for that, there's a whole bunch of implications. How can the market move up with a president like this? I mean, you can just go through the ritual. You don't even have to talk about it. But what is interesting is that at this particular point, we've crossed the threshold, I believe, especially the speed with which we went from 24,000 to 25,000. The speed with which we broke a millennium level to go to the next level is really quick. I still think that this whole 25,000, we have to watch it real closely. Maybe move up, maybe move down. It might become a fulcrum level for some sideways consolidation. But at this particular point, there is no question about it that the rotational aspect is saving the day. In fact, I wouldn't be surprised if it's just a handful of, say, Dow stocks that have really given the Dow a chunk of the big move that's gone on. I'm just, look at this. The Dow's up 90 points right now at 25,165. The S&P is up 9 at 2733. The composite index is up 45 at 7123. The VIX index is down at 9.32. That is really unusual to have it breaking out like this. I can't remember. I was trying to go back and think over the last 3 days. I've been thinking, when was it that I could recall so many consecutive days where the futures were either up a few points or maybe a little bit more, or if they were down just very briefly for a few points, and there were just one or two occasions, like Friday, a week ago, late Friday, where you had that tremendous sell-off. And that's one of the reasons why when we've been shorting for my opening call subscribers, shorting the Dow, we've been very good in timing it, just very poor in the fact that it only lasted for either, it was 4 days in one particular instance. The last one, it was 9 days of sideways consolidation before breaking out to the upside. This is very unusual. I just cannot recall having so few days of where there's some kind of a bad news event that pushes the futures down 15 points and we stay down all day. That is rare. So I'm putting the whole thing together, but in the meantime, I still think that the bullish bias is continuing. This is very close, I think, to some kind of a consolidation. I'm only calling it a consolidation at this particular point, but it would be to just re-energize for another move higher in 2018. But we might even find that pullbacks, if they aren't bought and the market continues going down, it'll take at least 3 to 5 sessions of selling, continuous selling, before the public actually says, whoa, I'm not buying anymore, I have to wait. Or they start to get a little nervous. Because otherwise, every time it's pulled back and you've bought, you've been correct. Here we go. So I want to go through this quickly. Now, the E-mini's up 9.75, just bumping into trendline resistance here. I'm calling this a leg D. That's all I'm calling it. Weekly chart is a leg F/B, and 120-minute chart has just gone to a peak. Well, we don't know if it's a peak yet, but it looks like it might be a peak if there's no new recovery high above 27.3375, was it? No, 23.7475. And it's at 27.3350 right now. So we're watching this one closely. So that's 120-minute. Also, you can see a lot of resistance just above. Now let's go to the other indices. We've got just a moment here before we take the first break. So Dow, INDU. Bumping into the resistance trend line. It's in a leg. I'm calling it an F for now. It could have recycled. I just don't see any reason why I need to change that F. Leg E in the weekly chart, leg E in the monthly, and this is the leg D that I said to subscribers we were waiting for in the 120-minute chart. We've already just made that leg D. So sorry if my voice is a little weird. Sorry, that's just the way it is. So 120-minute chart says I wanted a leg D. We've got that leg D. Let's see how you hold support. Meantime, back of the range at 25,172, up 95 in the Dow. There's tremendous support to fill the gap between 25,100 and maybe 25,075. So let's get back to our nitty-gritties here. S&P at this particular point is thanks. Here we go. S&P, very sharp move up. G/C daily, also bumping it very close. Yep, bumping into a trend line resistance, what I call the Chapman Wave, inside track resistance repellent zone. Right there, very close to it, maybe another point to go. Leg D in the weekly chart, leg D in the monthly chart. QQQ, I want to show you the QQQ. Look at this. It's a stupendous move from the 155s to the 161.66 level right now. Very strong, up $1.36, and a very strong leg E. And here again, trendline resistance, with very long-term trendline resistance, is at 162.51. Another point or so to go. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. If you haven't tried David White's daily trading newsletter, The Path of Least Resistance, then this month is your perfect opportunity. On January 17th at 5 p.m., Dave will be hosting a special subscriber webinar where he'll be presenting on the newest feature in his newsletter, short-term sector charts that work on both the madness and wisdom of crowds. Join Dave on January 17th as he describes the method he uses to recognize these signals on a sector-by-sector basis, and as he discusses how he used this new tool to buy the gold miners in their seemingly darkest hour in December. And all new subscribers get a 30-day money-back guarantee, so you have nothing to risk. If you're a trader scouring the market for the next great trading opportunity, then now is a great time to sign up for the Path of Least Resistance. For all the information and for details on Dave's subscriber event taking place January 17th, visit the front page of TFNN.com.
Basil takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Yep, I see I got a lot of very good questions coming in here. So let me just do this. The IWM has made their peak C1, C2, and is now, I'm calling it a C3, but it needs to go above 155.41, the high of the 4th of December, to make that leg D. And very often we see these peak C1, C2s, you get that D and then you come right back again. So that would make it a leg E/C in the weekly chart, still very good. Our monthly chart would extend leg E. It hasn't done that so far. It's still a potential peak E if it doesn't go above that 155.41 level. So it's acting, I mean, it's lagging. It's only up 0.01 today. So this is saying to me that the rotational aspect is really important. And as I was saying before, I wouldn't be surprised if just a handful of stocks are really, this particular move now is with fewer stocks participating in many of the sectors. But I haven't got statistical proof. It's just my guess right now based on some other factors that I'm looking at. So I wanted to show you something here. Gold has held. Even today, it pulled back. Yesterday, pulled back and still made a new recovery high. Leg A continued. Today, it looks like it will make a peak A just below the high of yesterday, which is 1327.3. This is a continuous contract. Today's high is 1324.7. Fabulous move. In essence, the MACD is very, very strong. Stochastic is pulling back a little bit, but still strong at 94%. And that's why I'm thinking that perhaps gold on the next pull, I don't know if we'll get the chance. It looks to me like what will happen is you would think you won't get a chance. So if you go in round about here into, say, the GDX or the GLD, there's a chance that we might have a bit of a rally and then a sudden pullback, a little deeper pullback. And then we start to move higher. But the way it's acting, the way the weekly, if it closes anywhere around here today at 4 o'clock, gold, and of course gold closes a little earlier, the futures. But in the meantime, the MACD has finally crossed positive. And that's what I was waiting for. I didn't think it could do that in this particular move, but it has, and I respect that. So gold is going to be very interesting because the dollar tried to rally. It's had those 3 days, a cluster formation. This is actually the 4th day. It's not a cluster formation now because it hasn't made a very higher intraday high, 92.10, should have tried to get to the 92.20s, and it hasn't. So this is a small little candle. But there are some signs that it's attempting to try to form some kind of a base, but the weekly chart has really pulled back much too much. It's an arch formation. And that's saying to me, you might get a bounce in the dollar, maybe going to the 92.50s, maybe just a tad higher, but then it's probably going to come down, make a lowercase h to a lowercase m. Later on, perhaps, the dollar really starts to move higher. And if you look at the EUR-USD, that's the euro-dollar currency pair. So if you're looking at the euro, it's making potential peak E today. Same as gold, is a very strong MACD. Daily stochastics at 88, not quite as strong as the gold one, but at 88 is still strong. And you've got this cup formation. Now, a Chapman Wave drop bucket formation where it looks like the arm going up and then the cup formation. I always think of the Statue of Liberty here. I don't know why. If that starts to fail, you will see this MACD deflect lower in the weekly chart. And suddenly the price is not at 1.20 that it's at right now, and it's not above the high that was made back in the week of September the 8th at 1.2092, the day that the dollar made its low. You will see this not breaking above, but it's starting to fail and go under 1.86, 1.186. And that's the 9-period moving average, 1.187, and closes under that. You'll see that MACD fail and the stochastic fail. Right now, it's actually looking pretty good. And the monthly chart is almost in leg B. And that 200-period moving average right there at 1.216, so far it's acting like a magnet. So that's a positive there. And that kind of influences me to think that gold is probably going to have a little bit of a rest here, but then it could break out to the upside more. And if you're looking at the USD JPY, having a very nice rally above resistance. I'm going to raise this resistance line. I like to choose the points of contact that I think are most important. So if it, at 1.1321 up 0.46, if the yen actually can break into the 113.41, it really needs to get higher. It needs to get to the 113.50 area. It gets to 113.50, and I think it goes to a higher high. And that could influence the dollar. It could. But now they're kind of separating ways. Dollar's acting way weak, and the yen is acting stronger than the dollar. At first, back in September, they were going in the same direction. Now they're not. No, they're really not. Okay, next thing is high-grade copper. Here we go. High-grade copper is looking like, yep, that's what I said before. This pullback that we see here, time rather than price in high-grade copper, says watch closely, because if there's a close below let's call it 3.2. It's at 3.23 right now. If there's a close below that, it says, you know what, copper might need a little bit more time. The MACD is good, but turning down stochastic's good, very good. It was very good. Now it's turning down. It's at 81%. So I'm watching this closely, because I was expecting that copper would pull back and then push to another high, a recovery high, that is. So let's see if it's able to do that. In the meantime, I'm forgetting one thing. Yep, we've got crude oil, two things. Crude oil right now, it's a peak C. I had a couple of questions here about crude and XLE. Would you short the USO? No, not yet. And not only that, I'm not sure that I want to be short the USO at this particular point. This is a peak C with a little doji candle. I suspect we will make a D in the daily chart. That'll be above yesterday's high of 62.21 on the continuous this is the crude oil continuous contract. And the V-shaped pattern that we were looking at in the weekly chart, we've broken well above that, and that's making this whole area. Well, if you're talking about a real quick short, I'd say next week you probably get a chance to do that. I don't think it's a short. I think I'd rather be sitting there saying, let's see how it pulls back, because it's a potential buy. I'd rather be thinking that way than thinking short, because the technicals are very strong. So the answer there is no. XLE, I was asked about, so XLE is trading right now. It is in leg E, possibly a peak E with very strong technicals. It's the same sort of thing. I haven't done a left side, right side price time match, because the low would have to be in a different place. And that's an artistic visual thing. I love it when it's exactly as it was for a number of things we've been looking at lately, where it's an exact left side, right side price time match. So at this particular, I'm just trying to think what I could show you as CX. Is that the one? Yeah, there are. Here's the left side exactly. Look at this. We're going to, I always like to bump up against what I call the Grand Canyon cliff on the left side. So 7.99 in CX, which is CMEX, trading down 4 cents right now at 7.92. And it went to that leg C. Look, and exactly with the plumb line, exactly on the low of 7.09 on the 7th of December, you had the same number of bars to the left as you had to the right. So when I'm looking at, of course I have to think about what I was looking at. What was I looking at? Now, XLE, I haven't done that. Actually, during the break, I'll do it. I'll do it during the break from where I consider it to be a very important point, low point, and then we'll see what we do. I'll be right back. Dow's up 99, S&P's up 10.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we're back. So, yeah, I've got a left side, right side price match to the 27th, week of the 27th of January of last year, a year ago. 75.31 was the high. We're at 74.95. We've hit today. We're at 74.62. And it goes, I missed it actually. It should be next week. It should go to next week that there's a test of that level. And then I think you've got to be a little bit careful and go a little higher because the left side high is all the way up at 78.45. That was the high of December the week of December the 16th. So now what I'm really looking at, just get that, is what I'm looking at is that the XLE is still good. No, I wouldn't be shorting it. So I'm going to go straight to Ken in Kansas. Ken, how are you? Sorry you had to wait. How are you?
I'm very good, Basil. That's all right. I enjoy listening to you.
Good.
I have a question on UNG. Has it had a reverse split or something?
You know, I missed. There was a conversation going on. Tom was going through it with Tommy early yesterday, I think, or the day before. And there's some aberration going on. I was really busy, so I wasn't able to actually fully hear. I just heard a snippet of it because for my subscribers, we had a long position. I expected a pullback. I was waiting for the long position. We got in at UNG, and let me read it to you so that I know apples to apples here. We started a half long at a 5.72, and we took a 6 cent loss. What is that? That's less than a 1% loss. I just wasn't prepared to do anything other than that. And it was the first time we've been in UNG in ages. And I didn't understand it, but there's something going on. There's a huge price difference between, or like a route, one of the aspects of natural gas. I don't have it in front of me, and I don't. I didn't hear the whole conversation other than to say to myself, oh, there's a reason why it pulled back even sharper, because in this cold weather, UNG should not have done that. Now, it's trying to stabilize at 22.08. Do you have a position, or are you just looking at it?
No, I have a position, but my broker still shows that it's still the same number of shares that I have at this.
No, this is, if you're talking about, it's a 22.08, correct?
Right.
Yeah, okay. So let me explain what I'm looking at chart-wise. I do believe that there's a pattern here. I don't know what all the other aspects are. I'm sorry now that I wasn't able to listen to it carefully. Maybe I'll reprise it over the weekend. But there's something going on. And because there's something going on, it means that the UNG, which is United States Natural Gas Fund, is trading. The way I'm looking at it is trading in an aberration to what's going on in the cold throughout the country, and the cold remaining very, very low. That is the temperature.
Yeah,
so
I'm surprised it hasn't gone up some, but I bought it at 651 some time ago, and.
Oh yes, yes. That's had a split. It's had a
reverse split.
It's a reverse split. Was it 5-1 or 4-1? Maybe someone in the den will know.
Okay.
Yes. I thought you meant just in the last couple of days. No, it hasn't for the last couple of days. But yes, it did have a split, and I'm anticipating, in fact, something like the TVIX, which is trading something in the 4s right now. I would not be surprised if it's also coming down, and it too is going to have a split. All these things split. They just do this over and over again. So yes, it is split. But
I don't know why my broker wouldn't show that my shares have gone down, though.
Yeah, but you should have. So you paid 6, and they're trading at 22. So and maybe they're down from where you bought them.
Yeah.
You know what I'm going to say to you? There's something amiss that you should just find out from them. What's going on? How many shares you do have? That's a purely technical thing. But as far as the chart is concerned, the weekly chart is a really ugly candle considering last week's fabulous green candle. This is way deeper than I would have anticipated. I'm actually holding off natural gas right now. If I see it start to get to the 2310 area, 2280 to 2310, I think maybe then I want to be buying it. But at this particular, and now it's a split on the 22nd of December, 144 split, Dana in the den says. That's UGA. So they all must have split. UGA is, in fact, United States Gasoline Fund, and the UNG is the Natural Gas Fund.
Right.
So I think they all did a split. And I know that I had to change my notations. I just can't remember from when. So, that's all I can say. But as far as it rallying is concerned, something is wrong here. You know what I'm going to ask you to do? Why don't you, if you're around and you're able to do it, call Tom at 3 o'clock. Ask him about it. I'll try to listen then. No, I won't be around. I'm going to try to listen in the archives because something's going on. It's an aberration to what's normal, and that's all I got from it. And I'd be very careful just in terms of the relationship. But I think UNG, as it stands right now, something's amiss when it goes down from the 24s to the 22s when you've had some of the coldest weather the Northeast has experienced for this amount of time.
It's strange.
It is.
Okay, thank you, Basil.
Hey, always good to hear from you, and Happy New Year, Ken.
Same to you. Have a good year.
Thank you.
Bye-bye.
Bye-bye. So, folks, let me just do this. I had a couple of questions here. The VIX index, I just want to get to this. I've got a lot of emails, so I'm going to just devote my time right now to answering questions. So, the VIX index is at 9.34 right now. It's actually up a little bit. It's up 12 cents. I said yesterday that my suspicion is that if I was a fund manager at this particular point, I would love to keep my positions and just rather buy some insurance. I would not be using it as a trend marker. In other words, I would not be buying the VIX because I'm expecting the Dow to drop 600 points. It could do that. I'm just saying that would not be the purpose. It would be the purpose of not having to sell anything, but rather get fairly inexpensive insurance. I think that's what I'm looking at here. So the question is the TVIX, which is one of the vehicles that I always have in my newsletter. We don't trade it very often, but every once in a while we do. It's at 495. It made a low yesterday of 487, 480. Wow, I didn't realize it went down to 480. This is a big move, 15 cents up from the bottom, and here we are making new highs. So I think that the TVIX, now for anyone, most people don't even look at the TVIX. This is the VIX index. It's a 2x trading vehicle. Just don't even think about it. But if you're a day trader and you really know how to handle your day trades, you're very comfortable. Right here at 495, I would not be surprised if that 480 level is not broken. It can go down. I'm not sure that level will be broken from yesterday between now and Tuesday or Wednesday. I think we're getting real close to some kind of a pullback, just a short-term pullback, as that's the way I'm looking at it right now. So the VIX, I think, is in play. The TVIX, this is only for traders. I would, as I say, 495, 480 is a 15 cents. I never have a 15-cent stop on these things. I make it real tight. I'm either in and correct or out, and that's it. So that's the way I'm looking at it. There were a couple of other questions in the den I'd like to get to, and then I'll go to all the other questions. I'll be right back. The Dow is up 83 and the S&P is up 8. Let me just look at my mini chart. Yes, there's that arch formation I drew in here, and very interesting.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks. So this is the 5-minute chart, that aberrational up and down move at 8:35. Really a continued, really a peak C, and then it went to a D in the 5-minute chart, pulls back very sharply from the 2735s, slips down to 230. I keep saying 230. It's 2,723.75. Got to get used to these numbers. And then it rallies. It doesn't make a new high. It makes a great leg B. Starts to arch over, but I still see some internal strength here, so I'm not sure that we'll see how it holds. I'll make it real simple. If it goes at 27.33 right now, if the E-mini goes above 27, wow, if it goes above 27.36, that'll be really a strong close on the week. If it starts to slide under 27.30, that says, we're done for the week, just going to have a bit of a rest. Going over the weekend. Those were the parameters I'm watching. Now, a couple of things that I want to look at. So there were a couple of questions that I had. Let me just get to them one at a time. Race. Okay, race is Ferrari, and Ferrari had a huge, where did that go? Race, R-A-C-E, had a huge move yesterday, 2 days ago. Followed up today with a slightly higher high. It made a peak G in the weekly chart. It was actually a peak F, and then one of the quickest A to B to C that we've had in this particular chart in a long time, in a sideways move, that is. And it goes to a G, and then turned out to be a 1, 2, 3, 4, 5 in the Chapman Wave. Pulls back very sharply from the 120 level, goes down to the 103s, and now it's trading back at 112.22, right in the middle of the range. I must have been good news. I was hoping it would be a little longer than this, because this is a leg B in the monthly chart, and I'm hoping for a test of the 102 to 100 level in Ferrari, trading at 112.22, up 91 cents. That's where I wanted to start thinking about getting into it for this next mega phase, going straight through and straight up when money is just coming in to the the fund managers' pockets, and these guys start to buy their Ferraris in as if they were Teslas, and Teslas as if they were Toyotas. So I'm looking at this and I'm thinking, that's a bigger move. There must have been news. I don't know if it was earnings yesterday, whatever it is. A huge gap up on the 4th. It goes from the 106 area to 112s. So we'll see if this gets filled now, or if we've really begun the next move to the upside. My thinking here is that race, if you wanted to get in, I can't buy it on a gap like this. If I'm thinking it's going to go to 122, yes, then you could take a 3-point risk at 112, make it 109 stop. I think that would be fine. 3 points is like 2%. Yep, that's under 2%. I'd say 2% risk, but I'm expecting it to go to C and D in the monthly chart later on. I thought it would be later on. Next question I had was W. What was that? W something. Yeah. Okay. Couple of WPM. WPM, that's familiar now. WPM is not familiar at all. Wheat and precious metals core. I just don't remember this at all. This is a tough chart. I'm just going to say that it's acting okay. It's a 2208. It looks like it wants to make a cup formation and go to the 23 level, 23.06. Here comes a sneeze. Made the week of the 10th of February of 2017, and it's trading at 21.98. Yeah, I just think it looks good. Wow. I think it's going to be pulling back quite soon. I would not be surprised if it tests 21.50. It's at 21.98. I'm sorry, this one is a tough one because of the monthly chart. Silver Wheaton. Oh, it's the old Silver Wheaton. Oh. Huh. All right, well, then it's got the cup formation, and I'm expecting resistance at the 23 level. So it's looking good, okay, right now. I think it's got a little bit more to go to the upside. Then I think it starts a sideways consolidation. I'll have to do more work on that. I can't say. Next question I had was SMHs. Would I please look at the semiconductor index? Now, this is very impressive. Intel comes out. This is this kind of a market. There was a period where if the news that came out on Intel, any other period, you would have seen those semis get crushed. I mean, right across the board, even though they might not be impacted at all. But instead, what happened was there was a pullback in Intel. They said they're going to get onto it within a week. Intel is now up 59 cents. It held that rectangle that I've been drawing right here for the weekly chart. It looks like it wants to go to a D at some point, 45.03 right now. The high that it has to pierce is 47.64, and then it starts leg D in the weekly chart, leg C in the daily. This is very impressive action. There was a period where, I'm telling you now, and especially when you combine it with Apple, the vulnerability that they spoke about, and of course also they got patches. The patches are not going to work perfectly. They're going to have problems with the patches. But isn't this incredible? This is what happens in a bull market. Every bit of news is good news, interpreted as good news, even bad news. And in bear markets, you could just blink an eye, and it's bad news. Market goes down. So this is a positive. So SMHs right now in the daily chart in leg C, going into that very ugly candle right here, the candle of the 29th of November, 104.04 was the high, 98.81 was the low. That's a huge move, and then it continues down. So now it's filling that gap, making a cup formation in the weekly chart. Yes, it's acting very well. I thought it was going to be a short. I was ready to short. We just said, nope, step aside. This is not going to work. And what I'm looking at right now is that it broke the resistance in that up channel. Remember, two fighting patterns. One is the cup. The other is an arch. The other is the cup. If the arch pattern doesn't fail, in fact, it's a successful arch pattern, and it's got the up channel. So this is positive, and I suspect it's going to go a little deeper into this ugly candle. So 104.04 is the upside resistance there, but it's acting very well right now on the shorter term. Monthly chart, it's very good, but the stochastics, there are hints in the monthly chart that the semis might come under pressure in another week or two, but right now they're acting very nicely. The next question I had was, yep. Okay, let's switch over to the other questions I had. FDX, what's the question? FDX, the waveform. Yeah, okay. FDX, very strong move. It recycled. This is actually, I'm going to call this a G/C right here. But the MACD is very strong, stochastics very strong. It's probably a C. I'm just going to call it a C for now. Let's see what happens. Let's see what happens with the C. And the monthly chart, is that recycled? A, B, C, D, E, F, G, G/B. I'm just putting it in G/B. Very strong. And Fenix monthly chart is in leg E, and this is really quite something to behold. Wow, this is really impressive. Very strong, and that's helping the IYT, which is really also the question. The IYT right now is in leg E. It's getting a little tired. Yeah, I'm not going to rush through this. I'll be back and we'll talk. In fact, it's important to talk about the transportation index making all-time highs. Leg E daily, leg E weekly, and leg E monthly.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
So, a couple of questions. Short XLE, I said no, I wouldn't short XLE or the USO. Question here, Sarah says, best start to the year since 2010, similar pattern to come. Let's talk more about the patterns next week because this is still an excellent, this is one of the best weeks we've had. I don't want to jump the gun there. Question about Cisco, let's just do that real quickly. Cisco, right here, where am I typing it? Right here, Cisco, CSCO. Yeah, this is a leg E with a little doji candle. This is one of the reasons why, and the MACD is just about across positive. It's very unusual to have these kind of diverging, look, all-time high, spikes up, candles getting thinner and thinner, meaning that it's, at best, it's going to have a little sideways pullback, or at worst, it'll be pulling back a little more to 39.55 right now. Maybe we could test 38.87 to 38.20s. But the MACD, if that crosses positive, that gives it another oomph, at least for a little bit. But if it deflects lower, that's going to be important. And the stochastic is good at 81%, but really it's not great. So, and leg F in the weekly chart. So, Cisco, what was the question? Cisco, Mike, the four horsemen of the composite index. Yeah, you know what? Let's do that. We'll do that because we're going to run out of time. I'll do that. I'll start off next week. We'll have a segment where I'll look at the key of the four-letter names. The Cisco's, Apples. We'll go Google. We'll do them all. So and this particular point. So Goldman Sachs. Let's see what Goldman Sachs was the question about Goldman. Yeah, where's Goldman? Goldman's, you see, pulling back. It's down 276 at 254, and this goes to the whole thing with the financials. And as I said, I do believe Goldman, based on the monthly chart, is going to have a spectacular 2018. I think it's just taking a breather right now, especially since rates are not skyrocketing, and that's what should have been helping the financials, and they haven't really. The next question is, yeah, okay, I think I've covered all those questions. So all I can say is, hey, check out my opening call, my daily newsletter, go to the front page of TFNN, and I hope everyone has a great weekend, and thanks for being here. Stay tuned for Steve Rhodes, Dave White, Tom O'Brien, and have a wonderful weekend.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.